Hello traders, my name is Grigor Horvat and welcome to a new video update in which we will take a look on gold, take a look on oil and also dollar CAD. Now, as you know, gold has been in a sharp downtrend since Thursday already, but the real move came in on Friday and today on speculations that Cyprus will maybe have to sell their gold reserves. Somehow I doubt that this will happen, but even if it will, then the question is who will be the buyer of this gold, and I suspect that Peter Schiff has pointed out a very good point that probably if Cyprus will sell the gold, then some other central banks, some other countries will be buyer of this gold. Okay, so if or when buyers will occur, then of course gold price will probably increase because of a huge demand. Okay, so I think that even if the gold is in a very deep pullback here from their all-time highs, I still think that this is only corrective retracements. As you know, I'm mostly technically oriented on the markets, so actually it's not important what others are saying, what fundamentals are doing, but to me the most important is price. Okay, so at the moment, yes, price is falling, and we have been tracking two different wave counts on weekly gold chart. One was this triangle. Okay, we were looking for more sideways in wave 4, and one was this ABC pullback in incomplete wave 4. Okay, so obviously in both cases the patterns are corrective. Okay, so we of course were not bullish at the time, we were just waiting on evidences of which of two wave counts is correct. Now, because the market here fell below this wave A support, we of course know that this count is invalid, so now we are focusing on this wave count, which shows wave A, sharp fall in wave A followed by a sideways price action, which was a wave B triangle. Now, when the price has collapsed through this lower support line and through this wave A swing low and wave B swing lows, then we know that wave C is now underway, which should be structured by 5 legs. So here I'm looking for wave 1, wave 2, nice, very typical price action for a third leg here. So I think that we will see more weakness here after any corrective bounce. Okay, so we will again turn bullish on gold only when we will have 5 waves in wave C, but for now we expect even lower levels, because on the next daily chart we can see that prices collapsed sharply through this base channel, and as you know, base channel breakout occurs usually in the middle or at the start of a wave 3. In our case this was wave 3 of 3, so we have more room for downside here, but keep an eye on the fourth wave's pullback, because I think that this could be some short opportunities when the price action unfolds. Of course, you will need a 3-wave bounce in this minor black wave 4. I will not look on the 4-hour charts today on this gold, because simply it doesn't make sense. Okay, because we have a straight move down. So for now we are bearish on gold, and we expect a pullback in the near future, probably or I should say maybe from this 200% extension of this wave 1 measured from wave 2 top, where this subwave 3 could have bottom, and we will see a 3-wave rise in minor black wave 4 and then another sell-off to complete the red wave 3. So for now we are bearish, and if you want to join the larger downtrend, then of course you need firstly to see a 3-wave rally. Now let's take a look also on oil. Oil has been also in a very sharp downtrend. That's my alternate count. We will take a look on primary count. On the weekly chart we are tracking this wave B triangle, and we are probably now in the final stages of this wave B triangle, because we are already in wave E. This was wave A, B, C, D, and now wave E. Now it seems that we will be going lower, deeper in wave E, probably below this 83.90 swing low from October 2012, and the reason is of course this chart on a daily basis, where we can see that recovery was clearly a corrective. Okay, notice that the price action here has been trapped within these two parallel trend lines. As you know, if you see market trading sideways, choppy, and overlapping within two trend lines, then this is this is evidence of a corrective price action. When you see a break through this lower trend line of this corrective channel, then this is usually indication for a downtrend continuation or completed corrective pullback. Okay, so we have seen a sharp fall through this trend line, through this corrective channel. So I suspect that this wave B is complete, which was a double zigzag. Okay, this was a first zigzag with an extended wave C, wave X pullback with an extended wave C, and another 3-wave rise with an extended wave C. So now we are looking lower here. Ideally we are now in the middle of a wave C, which should be structured by 5 waves. This is wave 1, wave 2 pullback, wave 3 underway. Now on this 4-hour chart, you can see how these base channels and corrective channels worked. If you recall, 2 weeks back we firstly thought that this is only corrective pullback in the middle of a larger ongoing uptrend, but as soon as we spotted this break and daily close well below this trend line, we immediately knew that this is not a corrective channel anymore. Okay, because the price action went out of the corrective channel. So actually this corrective channel, which we thought it's a corrective channel, became a base channel. Okay, because we knew that if the breakout occurred at that time, that market is trading impulsively, and this breakout through this base channel usually occurs, as I said, in the middle of a wave 3. So actually the price action that we are seeing today was already evident at that time when we spotted this breakout, because we knew that market is trading impulsively. So then market fell lower in 5 waves, which was a final confirmation this market will be trading deeper. Then we anticipated a 3-wave bounce. Well, this bounce was a little bit more complex but still corrective. Notice that prices were trading within these two parallel trend lines. Okay, we didn't see any breakout to the upside, or I should say a decisive breakout to the upside out of this corrective channel. Okay, so because the prices stayed choppy, slow, overlapping within these two parallel trend lines, this was indication that yes, this is corrective pullback and that we should see a break to the downside. Okay, so we were waiting on this break through the lower support line of a corrective channel. As soon as that occurred, we of course turned immediately bearish, because we knew that correction is most likely complete here and that market will move lower in a third leg of decline, because third leg was expected, because we know that even if this whole pullback from this highs will be corrective, then we still need 3 waves to the downside, because 3 legs are the minimum, is the minimum structure of corrective patterns. Okay, so we turned bearish here. We're looking immediately lower towards $90 per barrel, and as you can see, the price is now even extended through this 100% Fibonacci level, which is actually equality compared to wave 1. This was wave 1 and this was this is now third leg down. As you can see, we are below this equality level, okay, measured from here. So we are probably in a black wave 3 now and not wave C. Okay, if this would be a wave C of some corrective pullback ABC, then of course you would expect this wave C, in wave C, a decreasing bearish momentum, very slow price action, definitely a slower price action compared to wave 1, but this is actually an increase in bearish momentum, an increase in volume compared to black wave 1. The move is already longer to black wave 1, so I think that we are in a black wave 3. Okay, we could see a little bit deeper levels in the very near term, probably towards 87, maybe 86 for wave 3. Then be aware of a black wave 4 bounce, a 3 wave bounce before we go even lower through this 83 level. Okay, and now let's take a look also on dollar CAD. Dollar CAD on weekly chart, we are looking lower here. Maybe that's flat correction in progress, because if this move will prove corrective from this high, and if we'll see a new low, then we know that this can actually occur only in two corrective patterns. Either this was a first leg of a flat correction, then this was a wave B, and then we will see a wave C rally, or we will see then maybe more sideways price action within a triangle pattern. Okay, but that's actually not important. This is a monthly chart, but the reason why I am trying to look for lower levels here on dollar CAD is because I want to stay with the large trend. Okay, I definitely do not want to chase this market and will try to pick the bottom, because that's not Elliott Wave tool is not for this type of using. Okay, so actually I will stay with the downtrend, and on the weekly chart I am looking at the sideways price action as a running triangle placed in wave X, wave A, wave B, wave C, wave D, and wave E is now rallying higher towards this red trendline resistance, which is an upper resistance of this triangle range. Okay, so if the market will turn lower, then I definitely do not want to see any decisive break above this trend line, and definitely not above this critical level, because otherwise this triangle will be invalid, and I of course will have to adjust the wave counts. But for now we will stick with this view. We are looking for a little bit higher levels on dollar CAD, because on the daily chart we are tracking here a double zigzag. This was wave A, wave B, wave C up, small wave X pullback, and now we are tracking another 3 wave rally. Okay, notice that this fall was which was wave B in a second zigzag is actually almost equal on pip compared to this wave B pullback. Okay, at the same time we tested the previous highs. As you know, when the high is broken, then this high will typically become a support if the pullback will occur. This happened here, and just slightly, or actually exactly at 61.8% retracement area. So I think that's a very nice reversal zone for possible more upside on dollar. In fact, on the next 4-hour chart we can see that price action from the recent highs is very slow, it's choppy, and it's overlapping. Okay, and it's contained by parallel lines. Okay, you can see overlap here, we can see overlap here. This was a spike into this zone here. So, and now again we are trading higher, and if we consider the Elliott Wave rules and Elliott Wave guidelines, then we know that this fall cannot be counted impulsively. Instead, it can be counted correctively as a double zigzag, and because of, as I said, very slow, very choppy price action within this trading channel, which is usually indication of a counter trend movement, temporary counter trend movement. Okay, so because I think this is corrective movement, then of course when the market turns, out of this trading channel, we need to turn bullish again and look for impulsive rallies. In our case, I'm looking higher now for a wave C, because the prices, as we can see, moved through this trend line of this corrective channel. Now this very sharp price has personality of an impulsive leg, so even if this market will move higher only in 3 waves as a part of very big complex correction, I don't know, but even if this will be only an ABC rally and not a 5-wave rally, we still need to see more upside after any pullback, because as I said earlier, 3-wave patterns is the minimum structure of corrective price action. Okay, so if we identify this as an impulse leg, then this impulse should be part of a minimum 3 waves to the upside. So this pair is definitely looking very interesting for more upside to come in this week, as long the prices are trading above this critical level, because when wave 2 will occur, we know that wave 2 must not retrace more than 100% of wave 1. This was wave 1. At the same time, we know that Aussie dollar turned sharply to the downside in the last 3 trading days, which also is looking now bearish and actually supports the idea that commodity currencies will weaken. Okay, and this Canadian dollar is also commodity currency and is trading inversely. Dollar CAD is trading inversely to crude oil. Okay, if the oil prices will be falling, then you will typically see a stronger dollar CAD, because dollar will appreciate, Canadian dollar will depreciate. So I expect more upside on dollar CAD, also because the crude oil is falling and we expect more weakness on crude oil. So this supports the idea that dollar CAD will rally, and I'm definitely interested to go long dollar CAD, and will track this price action very closely in this wave 2. Okay, ideally from the intraday perspective, we will see more upside here. I have 1 hour chart here. We will see more upside here to complete wave 1, and then a 3-wave pullback back towards this trend line in wave 2, which is this trend line. Okay, and this trend line could be could turn into a very nice support in black wave 2. If you are more like a swing trader, then of course, if you want to get involved, you just keep in mind that market should not move below this critical level. So we already posted today a trading strategy on Elliott Wave counts page for dollar CAD, for those who know how to manage their own positions and want to somehow avoid the daily intraday noise, okay, and want to stay with the primary direction of a trend, which in our case, based on this 4-hour count, based on this daily count, is to the upside, and based on lower commodities and metals. Okay traders, this is it for now, and I will catch you later on the intraday updates page. Have a good day.